Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Stallion Uranium, a company working to fuel the future with uranium through the exploration of over 3,000 square kilometers in the Athabasca Basin, home to the largest grade uranium deposits in the world. It's Drew Zimmerman. Welcome to the show.
Thanks for having me on, Jesse. Appreciate it, and look forward to what we have in front of us.
Yeah, me too. And uranium is a very timely topic because it is ripping at the moment. It's becoming a very big story. We're seeing spot prices at 15-year highs, the stocks performing exceptionally, both in 2023 and off to a fantastic start here in 2024. Uranium being brought up by Jim Cramer. Now, I know a lot of people don't like that fact, the reverse Cramer effect, but it is amazing to see that it is getting attention in the mainstream media to some extent. And it's all champagne and bullish memes on Twitter. I'm wondering, in this situation of exuberance in the market, do you think some caution could be warranted here? Perhaps the sector is due for a correction, or is this bull market just getting started in your view?
No, you're right. I mean, that's a great question. We are seeing a lot of bullish sentiment out there across media platforms, and even Jim Cramer, as you say, always a bit of a worry when you see him post something sort of like a Barron's cover for this day and age. But I think what you have to step back and look at the fact that this is a commodity market and an equity market. And I think when you look at this commodity market, it's an incredibly small market that provides for a significant amount of global energy, and it's starting to get the attention that I think it deserves, and the ability for it to provide more global energy as we go forward. I think is really what this spotlight on uranium is coming to. So when it comes to the actual commodity price, as I said, it's not something that trades liquid on the CME like gold or oil. It trades over the counter with very knowledgeable market participants, and there's a supply demand imbalance. So as this price continues to move higher, it's warranted because of the underlying fundamentals of the supply and demand. So the commodity price, continuing to move higher dramatically changes the profit and the operations of the equity market participants. So I think the equities that have done well are doing deservedly well because again their underlying business fundamentals have changed as we've seen uranium price go from $20 several years ago to over $100 now. So they are significantly more profitable. Companies like ourselves that are looking for uranium, higher potential as we go and look for that underlying commodity. So, I will take, caution from, somebody as smart as Howard Marks, who always looks at equity markets like a pendulum. And I do think you have to say, we have a big pendulum that can go and then little pendulums sort of along the way. So as the little pendulum swings, yes, we've had very sharp run-ups even recently, the last 10 days or so to kick off this year. But I think as far as the big pendulum goes, we're really still just starting to go up. So maybe caution very short term, but again, it's do you try and pick and choose on which day is the best day to get into investment if you want to be in that investment for the next couple of years? It quite often, behooves you to just get in rather than just continue to watch from the sidelines.
Yeah, very well said. And I'm delighted to hear you quote Howard Marks. I'm the person usually bringing him up, one of my favorite investors of all time. Let's talk about some of those catalysts that are currently in place for the uranium sector, because the Sprott Physical Uranium Trust has played quite a large role so far in the spot price of uranium. They've recently taken another 100,000 pounds off the market. You've got Yellowcake PLC, a little bit of a different vehicle, but they've got an agreement with Kazatomprom to buy pounds. Other physical funds are also coming online. Zuri Invest out of Switzerland, and there's some other ones in the pipeline, I believe. Do you see this growing trend of funds buying up pounds, putting additional squeeze on supply?
Yeah, again, I think it's one of the things that's happening in the market, and I think maybe just let's step back a moment and put Sprott Physical Uranium Trust into context, I mean, it really sort of came onto the scene in a very big way, back in 2021. And during that time, so sort of mid 21 to mid 22, let's call it that 1 year period, we saw physical uranium prices jump dramatically from sort of the low 30s into the mid 60s. And a lot of that was back on the demand coming from the SPUT Physical Uranium Trust, because they bought 40 million pounds of uranium in that 1 year period. So when we look at what's happened this past year, and we've had a doubling of the uranium price in the last year, Sprott has come in and bought 3.9 million pounds. And again, as you just mentioned, 100,000 pounds so far this year. So 4 million pounds roughly in the last year. That's pretty small compared to what they were doing when prices really ran up, and we still have prices going right now. So I think it's something that will be very interesting, but I do think it's the fundamentals of supply and demand that have really come in over this past year. Now that we're over 100, and as you say, more people are becoming aware of the uranium story, is there potential for the financial instruments to come in and play and affect another lever on pushing prices even higher? That could definitely happen. I mean, if Sprott came in and needed to buy even another 20 million pounds, those pounds aren't out there right now, so that would have a significant impact on the price. And you mentioned Yellowcake, different structure that they have, but even with their agreements and taking their options to have delivery of those pounds from Kazatomprom, is just taking those pounds away from other buyers that are the utilities that are the main buyers in this market. So when you just have these instruments that are, one, just trying to give investors a vehicle to be able to have exposure to the underlying commodity, which I think is a good thing. I mean, look at the CME or other exchanges where you trade, millions and millions of barrels of oil every day, or hundreds of thousands of ounces of gold. And there's nothing wrong with that. It just creates a market, and it helps adjust supply and demand. So to have investors have a vehicle like Sprott Physical Uranium Trust, like Yellowcake, I think is a good thing. And again, maybe part of that is just the fact that it will drive prices higher, but that's because the market needs higher prices to bring more supply online. So I think it will be very interesting in the months and this year ahead to see if the financial instruments come back in a big way. And if they do, I think the price will have a pretty sharp reaction to that. But we'll see how we go in the year ahead.
Kazatomprom, the world's largest uranium producer, produces approximately 40% of the world's uranium supply. They have warned that they are likely to fall short of production targets over the next 2 years. Now, there are some theories floating around there that they've said part of the reason was due to a sulfuric acid shortage for their ISR mining operations. There's the theory floating around that that's just an excuse, and actually they've been overproducing their assets, and it could be a much more systemic problem currently ongoing. Obviously, we don't know all the facts right now, but one of the facts is that they will fall short of their production targets. What are your thoughts on that story and how it could affect the global supply of uranium?
I think it is an instrumental story, and I think we're just starting to see the ripples of that right now. I mean, I think when that story came out, we were 94, $95 a pound in uranium. I think just before we were recording here on Monday, I think I saw a post on $108 a pound. So obviously some very immediate reaction, and I think that's warranted, because I think when you look at Kazatomprom, again, to just take a step back and see how they became the world's biggest producer, it was sort of I want to say a 10-year period or so. I think it was about 2005 or 2006. They really started to ramp up their ISR production. They got a hold of, what the best solutions were. They could impregnate their deposits and start to see the uranium come out the other side. And in the 10-year period, they 5x'd their production. So they went from, largely, I think it was about 10 million or so pounds or a little less, to 50 million pounds a year, their peak production in 2016 or 2017. And now that's come off. And I think one of the worries that we had with this supply and demand, and just to say it bluntly, all the investors thought, they could just turn the taps back on, quote unquote. And now we're seeing, if they're not able to do that, and if they're not even able to sort of ramp back up a little bit near term, that does beg the question: is it not just a sulfuric acid shortage, like you were saying, given that there doesn't seem to be reason for there to be a significant sulfuric acid shortage? Have they over done some of their key deposits? I mean, it's an age-old story in mining. When you have a mine, you go after your best targets first, and you mine that out. And sometimes grades start to fall away faster than you want. They're not underground mining, but again, it's the same sort of principle of them going after the very best deposits. And as those get depleted, you're then forced to go after deposits where maybe the grade's not as good, and maybe the metallurgy with their solutions aren't as good, so on and so forth. So, but coming back to the key point, if you don't have this main supplier, and again, the uranium market is small. I mean, with them at 40%, that's like all of OPEC and then some for the oil market, saying, hey, we don't have any more that we can supply this market, and potentially we're going to be depleting what we do have, let alone being able to ramp up. That is a significant shift. And even when it comes to the psychology of the market, when you don't have this overarching person that can just come in and give you supply if you need it, and demand continues to grow, then those extra pounds just become that much more valuable. And I think that's where the market is right now. I think that's why we've seen such a significant move in the spot price right away. And I think it's why it's going to be a bit of a structural change as we go forward, to where supply is. I mean, when you look at Kazatomprom and Cameco together, and I mean, Cameco also having a little bit of trouble with their McArthur River and Cigar Lake together. We'll find out in the coming couple of weeks if they're able to, hit their targets for 2024, or if they're going to have to downgrade. And again, the extra lever with these two companies being such big players together, over half of the world's uranium, they've already sold those pounds as well into the market. So if they don't have that supply on their back end, it actually forces them from being that, player that can come in and supply the extra pounds the market needs, to now having to go into the spot market and buy those pounds that they were supposed to be able to produce, that they're just not able to. So it is a incredibly big story. And like I say, I think you're seeing the initial ripple right now that's very warranted. But this is a story that could have, lasting ramifications for uranium prices staying much higher than they are right now.
And another big story recently was over 20 countries pledging to triple their nuclear energy capacity by 2050 at COP28. Whether that actually comes to pass or not, I think the main takeaway from that is that now that nuclear used to be kind of reviled and used to be seen as, it used to be hated essentially by a lot of people who were concerned about climate change. And now it seems to be fully embraced. It's done a complete 180. And that sentiment shift obviously is massive in terms of nuclear energy proliferation around the globe. And I'm wondering about government support for uranium mining, because if all these companies are going to triple their nuclear energy capacities, it's going to require a lot of uranium. You're operating in Canada in the Athabasca Basin. Talk about the current level of government support in place for the uranium mining industry in Canada. And do you see that level of support increasing as Canada is one of those nations who made the pledge to triple nuclear energy?
Again, just to go right from the first part of that question, I think COP28 was, again, another significant shift in the uranium industry. I think that, what that led to, not only the ramifications of tripling nuclear output for all the countries, but it was also sort of that stamp of approval led by the United States and followed on by 22 countries, Canada being one of them, to say nuclear power is clean power for our economies going forward. And I think, that can't be understated how important that is. A lot of countries before didn't have nuclear energy in their clean power bills. So with that sort of broad approval, it allows a lot more governments to direct various levels of funding as they work towards net zero by 2050. So it was a very important moment for the nuclear power industry, and then vis-a-vis the uranium market. So in Canada, again, I think we are seeing more being done to support nuclear power. Even just recently here, we had the UK and the US working more on the fuel cycle, so the conversion and enrichment side of things, because again, we want to move that away from Russia, given the geopolitical issues that we're having. And back in Canada, again, I think there will be more of that comes to the market. We are very fortunate in Canada that we have a vertically integrated nuclear power system. With Cameco, they can produce, and then with their mill that they have in Ontario, they can bring it up to the level that the CANDU reactors need. So that's a very strong place for Canada to be, to have a very vertically integrated system. But when it comes to helping everybody else, I think we could also step up and have government support for conversion and enrichment. And then when it comes to the exploration side, again, we need more uranium, not just the development of pounds that are already found in the ground, but we need to find additional pounds in the ground. So being able to fast track and keep development processes going, I think is key. And I think we're seeing that, obviously, the Rook 1 project by NextGen and Triple R with Fission being brought along at a pretty good pace. And I think that needs to continue. And the big thing for us as a junior explorer is they do incentivize investors to invest in their company. So in Canada, it's a critical mineral. So that helps with some of the investment structures that we utilize, that makes it much more appealing for investors to put money into a junior exploration company. And I think that does help. I think there can be more that can be done with specific work programs. There are some grants for drilling in certain areas, but again, we're talking sort of 1% of your drill budget might come back to you in the form of these government grants. So that could get stepped up for companies like us that are doing meaningful work, really trying to find those next big deposits that can mean a lot, not only for the global power system and finding deposits that move the needle, but significant economic interests for the country of Canada as well, and the royalties, and again the prestige that comes with being one of the premier jurisdictions for a critical mineral that the world needs. So it's good to see the support that we have, and I think more could be done in that space.
Well, let's pivot to discussing Stallion Uranium specifically now, as you touched on it just now. For those unfamiliar with the company, give us the 10,000-foot overview.
I would absolutely love to. I mean, as we've talked about here, it was just very short on supply. We do have some development projects, but finding good pounds in the ground and big pounds in the ground is necessary, and that is Stallion's whole mission. Is we are setting ourselves apart by trying to find the next significant uranium deposit. We want to find the next Cigar Lake, the next McArthur River, several 100 million pounds that can really move the needle in a very meaningful way. And we're doing that really in a couple of different ways. One, you have to have good people. So the team behind Stallion, that they own 30% of the company, are absolutely industry veterans. They've had significant success. They started and ran Hathor Exploration, which was a uranium company that sold to Rio Tinto in 2012 for $650 million. Stephen Stanley, who was the CEO there, is on our board of advisors. So just absolutely incredible knowledge and experience from him. They were also, players that put foundational assets into NextGen. Everybody knows the NextGen story very well right now. So those are the key sort of industry stalwarts that give us the ability to have the vision to go out and create a lot of value and find that next big deposit in the coming couple of years. We've also added Darren Slagowski, who's got over 10 years experience in the basin, and most importantly, focused in the Southwest Basin. As they were making the NextGen discovery, he was working there on Spitfire with PurePoint, a lot of experience in that basin to find those deposits. We also just announced Matt Schwab, who's going to be a technical advisor. He was one of the early employees of NextGen and instrumental in finding the Arrow deposit. So again, very focused in the Southwest Basin where Stallion is. So with us, we've got the people, we've got the vision, And that vision is starting with a very large land package. We've got over 3,000 square kilometers, the largest exploration package in the Southwest Basin. That's all around where NextGen and F3 uranium are, and fission. So we're going after that next significant discovery, but we've got a strategy and the people behind us to make that happen.
Well, flesh out the main properties for us a little bit more. As you mentioned, obviously, you hold the largest contiguous land package in the southwestern region of the basin. So give us some more details on the main properties there and how your exploration has been progressing thus far.
Yeah, absolutely. So our strategy has been to start big, as I said. So we've got a very large package, 3,000 square kilometers, and the good thing is technology has continued to get better. I mean, they've been exploring the Athabasca Basin for 60 plus years, but technology just keeps getting better and better. So we're able to, with helicopters, do large, effective, and efficient regional surveys over this entire project. We have some 100% owned ground, about 80,000 hectares. And then we have a joint venture we did with Atha Energy for another 2,200 square kilometers. So over 3,000 square kilometers altogether. We're currently flying that joint venture project. So 2,200 square kilometers. We've got 2 helicopters in the air doing that. But our strategy is to start really big, take this big land package. And if we fly these effective surveys, we're going to have the best potential target zones that we could, really out of the sort of the entire corner of the Southwest Basin that we cover. And it's a pretty significant land package. And we know there's significant uranium endowment there. I mean, we've got the VRIC-1 project right there with NextGen. We've got Fission's Triple R. We have the new discovery from F3 uranium. We're right alongside some Cameco projects as well. So we know it's incredibly well endowed. We just need to go out there and do this work. So we've done the regional survey. And then once we do that, we focus in on the best potential target zones. So we're being very pragmatic with the data that's coming in and saying, this is the best area to take to the next level. And we've started to do that on our coffer project with our Appaloosa target zone at the north end of that. It's just straight east of the Shea Creek deposit, which is Uranium Energy Company in Orano, 100 million pounds of uranium in the ground, 13 kilometers straight east. It's a tremendous target. We're really liking how that's coming along. But again, it's going to be about proving out where there's significant other targets across this big project. So we're bringing up a lot of ground, but we're doing it very quickly. We're doing it very efficiently and very effectively to what we think will give us, probably 10 or more very significant targets and prospective targets to go after that could be that next significant uranium discovery that we want to make.
You talked about the team there, and you also mentioned a 30% insider ownership stake. That is something that investors love to see, and for good reason. Could you talk to us about that? How important is that for the company to have insiders be so committed?
Yeah, absolutely. Like I said, off the top, the key team members that we have are just under 30%. They're just under 10% each. But again, gentlemen that have had a tremendous amount of experience and success in the Athabasca Basin. And I think that's important because it gives you the vision, especially me as being CEO and saying, don't worry about just this next quarter. We want you to create this next behemoth in the next 2 and 3 years. And we're going to help you do that. And I think, some early evidence of that when Stallion came into the Athabasca Basin, we didn't have a single project until we announced our first transaction at the beginning of 2023. I mean, we started the process to get into the basin over a year and a half ago because we thought the uranium market was developing and was going to be a very good place to be. But with our team, we were able to execute on putting together the single largest land package in what we think is sort of the next gem of the Athabasca Basin because it's been underexplored to this point, but is about to see billions of dollars worth of infrastructure come in with Fission and NextGen developing their mines. So we came in and we built the single largest exploration package in that part of the basin. And you don't do that without a team that's got a lot of connections and a lot of sway and able to really execute on deals like we've been able to. So I think that's part of it. And then on the technical side, I think it's important to have people that know the area that you're in. And that's where when we took on our VP Exploration in Canada, Darren Slagowski, finding somebody who's spent a decade in the Southwest Basin, who's been, drilling for years and years, saw it come up when NextGen made their discovery. He knows the people in that area, how it's done, the geology. So that was key. And then in order to really help him on the technical side, we were able to add Matt Schwab just last week, which I think is absolutely tremendous for him. Having two geologists is always a great thing to bounce ideas off each other, and definitely part of the core team. But his knowledge in finding the Arrow deposit and being instrumental in that just goes such a long way. And also, I think shareholders should look at it and say it's a tremendous vote of confidence in the land package that we've put together, and the excitement that both of those gentlemen have, that the next big deposit could be on our land, and we're taking the steps to find it. So I think it's incredibly exciting to be able to have the team behind us that we do have. And again, I think we've executed on a tremendous degree already. And I think the year ahead is just going to be that much more exciting.
You recently tweeted out some news about your coffer project, where you said phase 2 on the Appaloosa target is currently underway with a ground TDEM survey that is utilizing a low temperature, liquid helium cooled superconductor technology called Jesse Deep Squid. Now, for those of us who aren't so versed in the technology there being discussed, could you maybe break that down for us in layman's terms?
Yeah, I mean, first, I will say to everybody listening, I mean, I encourage you to follow us on Twitter. We try and be transparent, and we put up some videos and tweets and stuff that you're not just going to get just from the press releases. So a good source of information there, because we are doing a lot. So we like to keep people informed, and that is a good channel that we like to utilize. So again, just to come back to that strategy of this big regional survey that we have, this is now that first focused, so higher resolution survey that you're able to do. I mean, maybe a simple metaphor there is just to have, Google Maps, and you're looking at a city, but you want to learn where the streets are. You're going to zoom in for a higher resolution. And that's what we're doing with this. We have a conductive target, magnetic lows, gravity lows. So we wanted to zoom in. So we've done this on the ground survey, which again is a helium cooled time domain electromagnetic survey that is just going to be that big survey brought down to a much tighter spacing that's going to just really increase that resolution. So we're able to target our drilling that much more effectively. Again, so it's that sort of next step and final step before we get into drilling that target. It's ongoing right now and should be wrapping up in the near term, and that will be great for us, because we'll be able to with confidence say that we've got a very exciting drill target to be going after. So that's going to be coming in the near term. But again, it's part of that strategy, that phase 2 of big resolution, really focusing in on these key targets, and then being able to test them with the drill bit. And that's where it gets really exciting. We know that geophysical surveys are great, and they're work that you have to do, but it is about drilling to find deposits. And when you find deposits in the Athabasca Basin, that's where we know there's a significant potential for re-rate. We saw that with F3 uranium going from 20 million to 150 million in market cap, and that's what we're doing here with Stallion is taking those steps so that with confidence we think that we can hit a mineralized zone and find that next big deposit.
Awesome. Well, Drew, thank you so much for joining us today. It's been a great conversation. Before I do let you go, the Vancouver Resource Investment Conference is coming up next week, January 21st and 22nd. Stallion Uranium is going to be there. Could you fill us in on those details? Will you be presenting? Will investors be able to talk to you? What's going on at the VRIC with Stallion?
Absolutely. I'm going to be there both days. Again, another key team member I didn't mention, one of our board members, Jay Martin, obviously the host of VRIC. I mean, he's a very busy guy coming up to this and will be at the conference as well. But I will be at our booth 234, both Sunday and Monday. And I am presenting on the second day as well, I believe 11:10, but maybe check your agenda to be sure on that. but we will be there. And most importantly, I think the important thing about these conferences is come down, talk to the management teams of the companies that you want to be invested in. I'm going to have our geologists there as well. So if you want to really get into the weeds, they're available. But definitely would love to see everybody come down and check out STUD. And again, I say STUD, that's how we trade on the TSX Venture Exchange. It's always a good tagline for everybody. But yeah, would love to see you come down and say hi.
Great. Well, that's an awesome opportunity, and I hope a lot of people will take advantage of that. I will put a link in the description below to Stallion Uranium's Twitter account as well as your website for people who want to learn more about the company. And thank you once again, Drew, for coming on and sharing your knowledge with the audience.
Yeah, thanks for having me on, Jesse. Really appreciate it. Thought it was a great conversation, so thank you.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.